hags and perma bears, traders, day traders. I don't care how you classify yourself. You're here with Trades and Gains, and big tech is reporting the Fed's gone full mime and Trump's threatening tariffs again. Yeah, it's that kind of week. Again, welcome to Trades and Gains. I'm your host, Max Pitts, and this is where we cut through the financial BS faster than Netflix cuts underperforming shows. Today, we're talking about Tesla, Alphabet, the market's all-time highs, and the Fed's latest game of maybe, maybe not. Everybody's favorite game, let's be honest. Oh, and Trump's back with more tariff drama because, of course, he is. What else does he have to do nowadays other than try to run the country? Because it seems he has no interest in doing that. Let's move on. The S&P is doing its best Cirque du Soleil impression, teetering on a high wire at record highs while traders pretend not to see the alligators below. The S&P is chilling at all-time highs. The NASDAQ is up 1.6% last week. Tech is carrying us harder than Ozempic in Hollywood. The Dow up barely, kind of like how the people who invest in can barely get up, if you know what I mean. Blue Chew partnership coming soon. Feels like it needs a Red Bull or a Blue Chew in this case, and a prayer. Or, whatever aphrodisiac you'd like to insert for that joke. Wall Street's in full optimism mode, but if earnings disappoint this week, this rally could fall harder than WeWork's valuation. Funny thing, I just watched We Crash, or that WeWork thing on Apple TV. God, that guy was a psychopath. But here's some key themes this week. First things first, we have the Set Hut Blitz earnings because we have 112 S&P 500 companies reporting this week. That's not earnings season. That's an earnings apocalypse. And at the center of it all, your usual suspects, Tesla, Alphabet, and Chipotle, aka Chipotle, the world's worst underserving Mexican food in America. Now, Tesla, if Elon doesn't mention robots, AI, or Mars colonization this quarter, expect retail traders to riot on X. Watch for margins, EV growth, and that never-ending promise of autonomy. Alphabet, yeah, we own that. AI, ads, and antitrust. They need to show growth or risk becoming Microsoft's search engine intern. Kind of like how Microsoft was basically tech support for OpenAI for that really long period of time. Chipotle, still charging $18 for a burrito that has maybe $5 worth of fillings in it. Criminals. Criminal! But they can keep margins hot in a cooling economy? Probably not. If we're being honest, I don't see it going well. Are we shorting Chipotle this week or what? Now, why does this matter? The Magnificent Seven are responsible for nearly all Q2 earnings growth. If they miss, it's game over, man. Game over. Strike three, you're out. Come to divorce court because you're paying the piper, buddy. Now, because this market is priced like everything's perfect, like zero inflation, 2% rates, soft landing, AI-fueled utopia, perfect. Good luck with that, you delulus. But moving on to our next thing, the Fed blackout and rate cut chaos. The Fed is officially in blackout mode, which means no more rate hints unless Powell pulls a Janet Jackson Super Bowl leak and, well, flashes his titties by accident, baby. But don't worry, Christopher Waller already dropped a rate cut bomb last week saying we should cut now. Markets, of course, didn't buy it. CME has a 5% chance of a July cut. That's lower than your ex's odds of personal growth and ever finding happiness again. Now, why does this matter? If the Fed does pivot dovish, we moon. If they surprise hawkish, though, this thing's going down faster than crypto in a bear market or your girlfriend on that masseuse named Miguel. Now, tariffs. Trump's tariff time bomb is back. Well, just when we thought we were out of the woods with these shitty handwritten letters he's giving to people, dude, email exists. I don't know why you're doing that, by the way. Well, not over, baby. Because as Dr. Dre would say, back On the next episode, hold up. Just when you thought the market could breathe, here comes the tariff man, threatening 15% tariffs on EU imports starting August 1st. Markets right now shrugging like meh, but let's be clear, if this actually happens and Europe retaliates, inflation's back, rate cuts die, and risk assets throw an absolute tantrum. Now, why does this matter? The market is priced for a soft landing, not a trade war sequel by Quentin Tarantino. Oh my God, that was such a good joke. But let's talk some let's go ahead and chat like some gals here about our weekly calendar. Monday, data, we have leading economic index expected down 0.2%. Why does this matter? Slowing growth would support the Fed's dovish camp. Earnings that day, we have Verizon, CLF, DPZ, and STLD. Tuesday, data, we have Richmond Fed Manufacturing Index. Now, why does this matter? A regional snapshot of factory health amid tariff fears. Earnings, we have Coca-Cola, GM, LMT, PM, and Texas Instruments. Wednesday, data, existing home sales, MBA mortgage apps. Now, why does this matter? Real estate is key to consumer sentiment and inflation trends. We have Google, Tesla, Chipotle, IBM, ORLY, T, and FCX all reporting earnings on Wednesday. Thursday, we have initial jobless claims, PMIs, new home sales. Why does this matter? Labor plus housing plus manufacturing, a full view of economic momentum in the U.S. right now. We're going to have earnings from HON, BX, Intel Corp, UNP, Love, DOW, KDP, and NDAQ. Now, Friday, durable goods orders. Why does this matter? It tracks business investment. A slowdown would support rate cuts here. Earnings, we have CHTR. So, what are analysts buzzing about and kicking their balls about this week? Citi, it's time for earnings to deliver. Evercore, strong results, just maintain altitude. Translation, you better not miss or we'll destroy your stock price out of boredom here, people. The key question is, will anyone outside of the Magnificent Seven actually step up and put their big boy depends on? Because let's be honest, people running these companies can't wear underwear. They're probably wearing adult pull-ups. Because if they don't, this market's got no legs. Like Lieutenant Dan, all right? Just vibes and NVIDIA hopium. So here's the big question for you. Are we about to rally to glory on big tech's back? Or is this whole thing one bad earnings print away from a collapse? You tell me, okay? Because our watch list this week, we got Tesla, Google, Chipotle, Intel, PM, ORLY, durable goods on Friday. If you're not watching this week's earnings and macro drops, you're basically investing with a blindfold and a prayer candle and rubbing your crystals before you go to bed. So good luck with that bullshit. Or you can come hang out with me at Investor Central Club, where you can get real-time flow options. And if you use that code July 2025, you can get 25% off an annual subscription. So you can pay for it once and never have to worry about that shit again. I promise you that. Don't forget, though, like, subscribe, and drop your take below. Are you bullish, bearish, or just hedged and heavily medicated? Let me know in the comments. Catch you guys in the next one. Watch out for some earnings previews from me. We did 5 of 6 yesterday. I got more coming out today, so don't you miss it, baby. Catch you guys next time. Love ya. Peace.